Namaskar viewers, hello and welcome to Sansad TV. I'm Teena Jha, you're watching Perspective. The Reserve Bank of India has released its latest monetary policy report following the 57th meeting of the Monetary Policy Committee held from 29 September to the 1st of October. The central bank has kept the repo rate unchanged at 5.5% with a neutral stance, a unanimous decision by the MPC. In his policy statement, RBI Governor Sanjay Malhotra underlined the committee's confidence in India's economic momentum. The RBI has revised upwards India's GDP growth forecast for FY 2025-26 to 6.8%, while sharply lowering its inflation projection to 2.6%, both signaling resilience and stability in the economy. On the show today, we take a closer look at what's powering domestic growth, what's keeping prices stable, and what this means for the future strength of the Indian economy. To help us decode the RBI's outlook, we are joined by two distinguished guests, Dr. Ashok K. Nag, former advisor, Reserve Bank of India. Dr. Nag, welcome to Sansad TV. Thank you for your time. We're also joined by Dr. S.P. Sharma, Chief Economist at the NDIM Neo Research Center, an institution dedicated to advancing economic research, fostering MSMEs and startups, and building strong academia-industry linkages. Dr. Sharma, glad to have you with us on this telecast as well. Welcome to the program. So let's first try and understand the MPC decision before we understand the growth dynamics. Dr. Nag, coming to you first. So the repo rate has been kept steady at 5.5% with a neutral stance. What, according to you, were the key considerations behind this unanimous decision?
See, the point is that the repo rate movements, the decisions taken on repo rate to see that whether inflation is under control or is not under control. When information is going haywire, obviously repo rate will go for the direction to curb the use of the fund of the your banking sector, so that it becomes a little costly, so that it can slow down your inflations, because demand and supply discontent high. That is why this happens. So now, if you see that there has been a substantial kind of a decline in the inflation rate, okay, and this means that there is not much of a scope for or need for the repo rate to be further diminished, further reduced, because it will not actually affect any kind of a further kind of a reduction of the inflations is not the right thing to expect, right thing to do. So RBI has given it kind of some kind of pause it has cut for the movement of the repo rate. Repo rate is it. Second point is that this repo rate declines, okay. What is RBI would like to know that how it has been it is prone to the users of the banking lending. If you look at the data which has been provided by the governor's speech, it shows that 110 last one kind of year, and more than 100 basis point has changed in the repo rate, has been made reduction. Whereas your banks, how much it has really flown into the consumers, okay, or the bank's loan providing is not that much, is much less. Okay. So that means RBI says that it is now, let us see that how today, whatever the repo rate is there, let it be kept as it is, where there is not much scope for even keeping the inflations much more less than what is issued now. So that way the repo rate is there. Second thing is that what is RBI, if you look at the RBI's decisions which have been given in this particular committee meeting, MPC meeting, the most important decisions are not there. What is the standard things like repo rate, inflations, all these things, much more are there in this thing. Second thing is that what is important for us to understand that even the external deficits, okay, which has been coming down significantly, not substantially, significantly, but because of the what? Not the merchant deficit money. What you call the deficit of the market related thing. More is that basically happened with respect to the inflow of what you call the inflow of the fund from the abroad as a kind of a limit A. So what is happening now, this part is not the most important part of this particular your committee meeting. The most important part is that something else.
Yes.
The most important part where it is there, first thing which is there is that importance of what you call expected credit loss. Expected credit loss, RBI has clearly said in this governor's speech that it is going to introduce it by another 2-3 years. And what is the expected credit loss means? The bank today gives the money for or the your capital for the your risk management risk capital based on the what has been defaulted or what is the kind of a loss they are making. That is the realized loss. But what is expected is the expected credit loss that today what are the your portfolio of the loans are there, how much of them are going to, that is some kind of a probability of default in near future, and that has to be the expected credit loss, and you have to keep capital for that. They have not told that, but this is a very important part of this. This will affect the banks substantially, and the creation computation of that will be very important.
Absolutely. We will talk about these set of measures and suggestions made by the central bank, which are aimed at simplifying the rules for businesses and the ease of doing business. But before that, Dr. Sharma, your opening thoughts on the RBI maintaining status quo, both by keeping the repo rate unchanged and maintaining the neutral stance. As an economist, do you think it indicates the right balance between supporting growth and anchoring stability?
This is a very, very calibrated step undertaken by RBI in very problematic global headwinds, because now India is very, very resilient at this juncture in the world of uncertainties, I would say, because now India's growth, if we go by the numbers of the last 2 months, these months were very, very dynamic for the Indian economy. Like our growth went up to 7.8% in the first quarter, and inflation has come down significantly at around 1.5%, and thereafter 2.1%. So the average is less than 2% in the last 2 months. And we are supported by the good monsoon behavior and more robust reforms undertaken by the government for the GST. Like GST rates have been reduced significantly, slabs have been reduced from 4 to 2. So these four developments are supporting the resilience of Indian economy at this juncture in an era of global headwinds and the geopolitics and Trump tariffs. To mitigate all these developments at the global level, now our economy has become more and more resilient to face the such kind of headwinds. So in that scenario, RBI has kept the rates stable to make it more resilient, so that India's economy is able to perform better in the global headwinds or the problematic Trump tariffs. So now the growth in the coming quarter is also anticipated at 7%. Thereafter, we will grow at 6.4% and 6.2% in the quarter 3 and 4. So the overall growth has been increased from 6.4% to 6.8%. So that is the great thing which has happened. Now we are growing more than double in the as compared with the global growth. Global growth is at and anticipated at 3%, and we will grow at 6.8%. And I believe 3 times higher than the US growth. US will grow 1.9% in 2025, and we will grow at 6.8%. So our economy is very, very resilient at this juncture. As you rightly said that they have mentioned many measures for the resilience of the banking sector, then the flow of capital, to improve the flow of capital, thereafter the ease of doing business, and strengthening the foreign exchange management, then the enhancing the consumer satisfaction, then the internationalization of rupee. So all these measures have been announced by the RBI to promote the resilience of the Indian economy and to make it more and more robust in the global growth trajectory. As our parameters, our fundamentals, like our exports growth, which is now very, very resilient.
Yes,
as
we will
compared
talk about the export
to
growth and the banking reforms, the sort of measures that have been announced. But sticking first to the focus on the projection of a stronger growth ahead, you spoke about the domestic growth performing well due to strong consumption, investments, government spending. These have been, of course, highlighted in the RBI report, with supportive factors like a good monsoon, GST 2.0, better credit flow, rising capacity utilization, sustaining the positive outlook. To help us and our viewers better understand how much of this growth do you think is being driven by consumption primarily, and how much by investments and government spending?
Yes, because GST reforms are now very, very significant for the Indian economy, as we need the consumption growth, and GST reforms will support the consumption growth at this juncture. Because this is not only to benefit the consumers, this is to benefit the whole economy. When consumption happens, then the demand increases and factories also expand their capacities. Thereafter, they deploy more and more workers in their respective premises, and your total economy becomes in a virtuous cycle of the growth trajectory. So this is, I believe, a big push to the economic growth with the reforms of second generation reforms of GST. So going forward, I believe this consumption trajectory will support not only the producers but also the exporters also in their working capital requirements, and also the manufacturers. They will also become more competitive in the domestic economy and in the international economy. So with the support of reforms and the good monsoon behavior, because when the monsoon behavior is good, then the farmers' incomes also goes up. Then they demand for more goods and services. So now they will get the cheaper manufacturing goods, and the demand trajectory will further increase to the next level and will support the manufacturing sector and thereafter the services and the overall economic growth trajectory. As GST reforms are anticipated to boost the growth, so I believe in the current year, in 25-26, there will be at around 40 to 50 basis points support to the growth trajectory. As already RBI has increased the growth estimate from 6.4 to 6.8%. This is the 40 basis point jump in the growth forecasting. So
In
in
fact,
the coming
not just the RBI, there are several global agencies, Dr. Nag, which are also reaffirming India's growth trajectory. So, for example, the IMF says in FY26, India is projected to grow at 6.4%. Fitch says 6.9%. In FY27, it predicts 6.3%. S&P Global says 6.5%. The UN projects 6.3%. The CII says 6.4 to 6.7%. The OECD says somewhere around 6.7%. It all, remains basically in the 6.5 to 6.8% projection, which the RBI has also mentioned. How do you see these projections highlighting the broad confidence, global confidence in India's ability to sustain high growth amidst the global uncertainties?
Okay. See, point is that whatever this growth India is now achieving, it is looking much better because others are failing substantial. Must understand that the entire Western countries are in deep trouble. In fact, they are deep trouble not only in the social front, also in the economic fronts. Okay, so this way they even the 1.5% or 2% growth of the USA, they may be enjoying that. Okay, much at least we have got the growth rather than the diminution of the thing. So 6.5% we are growing. That is much definitely important. But what are the issues are there we must be concerned with? First is that, for examples, we have reduced your repo rate by 100 basis points last 1 year. Okay, and what has happened to the growth of your lending to the corporate, to the manufacturing or the private sector? The private banks actually has 9.5% as compared to the 15% growth last year. Okay, that means that essentially we are growing. Because India has a very big kind of a country, and there are so many areas where we are doing very well. But as a whole, you can see that while there is so much less kind of a growth is happening in the credit, both from the public sector private sector banks, and also the other banks. That is very important part of it. Okay, Because I am reading that private banks had a sharp drop in loan growth in financial year 25. Okay, so this is one issue which must be understood by us. Second thing is that, see, today we must understand that what is happening because every country's economy is quite it's not independent to the others what is happening in the entire world. For example, if you look at our exchange, your external deficit, okay, it is very good now because of the remittation of the is very beginning. In fact, merchant deficit is increased, not that. So now the question is that the way the tariffs are coming, okay, these are the future to think of it, that will affect definitely our rate of thing. This is first point reason. But what is here? In this case, RBI has nothing to do. RBI can't generate the demand for the corporate sectors. I think that is RBI nothing to do. RBI was only kept the things going. There is no need for any reduction, because 5.5, if it make 5, it is not going to affect the growth any substantially. Okay, so why you do that? Okay, there is no need for that. So that's why RBI is in solid ground not to any kind of a reduction in the inflation in your repo rate, but that is not going to affect the required kind of a changes in the takeoff of the loan growth by the private sectors. That is the most important part of it. So RBI has done quite right. But what RBI has done is yes, actually those things are not being discussed in this particular MPC report, which are more important than even the report rate not changing. First is, I told you that one is the expected credit loss. Right. Second part of is there what we call the overlap in the business undertaken by a bank and its group entities. This in the just 23rd October 2024, RBI had come out with a circular where it was making a stringent kind of a condition, so that there is a certain kind of a firewall between the business part of the banking sector, because a conglomerate may have also banking and other things also. So they have some kind of a Chinese wall between these two things. But today, there has been a significant kind of a, RBI has told that we are going to significantly reduce these things, that there be, as long, this is the decision of that will not be more given to the hand of the, what you call the directors of that particular conglomerate, how they will distribute their funds across the thing. So this is a very important part of it. Whether this will basically help the banks or not to get more profitable, it's something to be seen afterward. This is a very important part of the RBI's changes in the policy. Because
okay, Dr. Sharma, what are your thoughts on what Dr. Nag is saying? There are simple rules for business, there are measures to improve credit access. How will these announcements help the exporters, companies that are seeking funds, infrastructure developers, also the urban cooperatives? What is the focus clearly on by the RBI in terms of ease of doing business? So do you see it as a major reform in terms of cutting the red tape? Is that what the RBI is trying to do?
Yes, Teena, these measures are very, very important at this juncture, because these are the challenging times and we have to increase the competitiveness of Indian economy. So they have focused these 4 or 5 major parameters, like increasing the resilience of banking sector. Now we are facing the global headwinds, and the futuristic scenario is also problematic as the war is deepening between Russia and Ukraine and in other parts of the world. So our banking sector should be very, very strong at this juncture to face all these headwinds. And second is the improved flow of capital, as we have reduced significantly the repo rate during the last many months. So that has to be percolated at the ground level, and there must be more and more reforms in the capital flow. Then ease of doing business, you rightly said that we have improved significantly from 142 to 63 according to the World Bank ranking. But that should happen at the factory level. Machines should feel the ease of doing business. So that should happen through the reduction in cost of doing business, as still there are many costs which are impacting the price cost margins of the producers, like the cost of finances, cost of logistics, cost of compliances, and the cost of your land. So all these costs are impacting the price cost margins. Though government is doing a lot of reforms and logistic costs are also coming down, but still the price cost margins are should be very, very competitive at this juncture to face the global headwinds and to become more and more resilient at the global level and at the domestic level. So simplifying the exchange rate, foreign exchange management, that is also very important as we are facing the headwinds in the currency scenario, and rupee sometimes decelerates significantly. So we have to manage the currency scenario very in a very calibrated manner so that our exporters, our importers, and our economy remains very, very resilient at the domestic level and at the global level.
Since you spoke about the currency, I'm curious to ask Mr. Nag this question. The rupee, Mr. Nag, has been one of the least volatile emerging market currencies, especially if you compare it to the other ones. What does this say about India's external stability, but also about how much of it is because of RBI's intervention?
See, RBI interventions will be there when there is a volatility much. See, RBI does not generally interfere when there is a certain kind of a flow, a certain kind of a change which is smooth kind of a change, either it is a depreciation or appreciation. When it is a smoothly going, RBI does not interfere very strongly. But when there is a volatility is very high, RBI enters the market. See, RBI main issue, which I think which will be very important in near future, according to me, is that we are basically having a what we call the deficit in our foreign exchange. If you take it now, these foreign exchange deficits today are being reduced to certain extent because of the remittances, mostly and service sector.
Right.
Merchant deficit has increased. Now, because of these tariffs, other things, if merchant deficit increase more and more, that will have some kind of problem here. So point is that is not RBI cannot have a policy on that thing, but RBI can see to it that whether if we are going beyond dollar, other BRICS countries, so that the ease of doing business, because when you are doing with the business with the foreign things, one of the easiest is that how you can change your currencies interactions between the two parties. Okay,
right.
And there RBI has a role to play, and I believe that if you read your governor's statement very quickly, that I feel that there is a kind of a recognitions of this problem, and I think RBI is going to. Yes, I think I forget that line. That is a line there. Governor is saying that we have to do that. How I can make it easy for rupee to be used as a kind of a change of as a kind of exchange business by the two parties in the thing, and that if RBI is the part forward, and if that happens, definitely will have a big impact.
Certainly. So with growth on the rise, of course, inflation is also easing, and there is resilience in our external sector. India seems to be in that.
The dollar has to go down substantially, because dollar is, I am telling you that there is absolutely no doubt that the USA is in a declining mode.
Okay.
The USA is absolutely declining. This is every empire, right, from the Mughal Empire or to the Roman Empire, every empire has seen its demise, and that demise has started for your USA. Who is going to the next? Is it China? I don't know. But point is that we have to see to it that we are not tied to that which a country which is going down the road as a kind of my best friend. We should not.
Certainly. So in these circumstances, what will be RBI's top priorities in the next 2 quarters is something that we'll have to wait and watch. But for now, we'll have to wrap up this conversation. Thank you once again to both our guests for joining us on the program, sharing your thoughts and views with us and our viewers. To your viewers, thank you very much for your time as well.
संसद टीवी के और भी प्रोग्राम्स देखने के लिए सब्सक्राइब करें हमारा YouTube चैनल और हाँ, इन्हें लाइक और शेयर करना ना भूलें।